Hello traders. Right, I'm working on something which is built on the 30-minute or 15-minute time frame, and I just wanted to share with you what exactly I'm looking at. All right, because this is a potential strategy that we can use and set limit orders and just forget about the trades. Okay, so this is basically based on accumulation, or if you like, a rotation in the market. Okay, so if you mark off this section here, okay, you can see that nothing's really happening. We're building up accumulation ready for the next move. Okay, now I also want to just identify this area here. Okay, now what I'm looking at is the accumulation phase. We've had a breakout to the upside, liquidity grab, and then we've had a massive push to the downside. This is another one. Okay, so we've had a rotation here, and we've then had a nice big long leg out in the bullish direction. Okay, now what my idea is, using the fixed range volume profile, is we identify where the highest area of orders was placed, which was here. Okay, and what we do then is we inline, we put our limit order. Okay, let's say we go with a standard, I don't know, it would depend on the pair and the ADR. I'd have to work that out. So what's the ADR on USD CAD? 89. So let's call it 20% of the ADR. You're going to be looking at around about 15 pips. Okay, and let's say we want to take profit of a minimum of 2 to 1, or we could even go for a 3 to 1. You can see that that limit order is triggered and pretty much dumped all the way down, and it's hit its take profit. It needs some adjusting. Maybe we're looking at the top of the range here. We'd have to take profit before the top of the range. So let's maybe go with a more modest 2 to 1, or maybe 2.5. Okay, so we got our limit order placed, set, and we've got our take profit hit in 30 minutes. Now, when we move the fixed range volume profile to this rotation here, we've got the same principle. Okay, whereas excuse me, we've now got the same idea. So let's go with a standard 15 pip stop loss. Okay, and let's go with, what do we go here? 38. Let's go 40. Let's go 3 to 1, or 2.5. 2.5 is going to be easy to hit. So we keep it modest, and again, 15 minutes, less than 45 minutes, we've hit another TP. What I'm trying to do is to get these areas to marry in with our manipulation point strategy, because I think over the last few months, especially through 2022, I've noticed that the point of control is probably the most valuable tool on the market, because it's where everybody's placing their orders. This is accumulation. As soon as we came up to this area where the highest volume was placed, it's wicked and gone. Now, I started testing this out a couple of months ago, but I was heavily involved with footprint, cluster delta, lower time frame, high risk to reward strategies. This is definitely something for the future. I'll keep you updated on it, but if you can take profits like this with the basis of a limit order placed, I don't see any reason why not to use it. Maybe start with just do it as a paper trading experience. It needs a lot of back testing, but I think this is definitely a good idea moving forward. with the volatility in the market, it takes the emotions out of it. You place the limit order and you leave it, and that's the end of it. And then you take the win, you take the loss, and over the period of 10 trades, if you win half of them at a 2 to 1 or 2.5 to 1, let's say we take 10 losses, 5%, and we won 12%, you're going to be 7.5% up after 10 trades. So I'll keep working on it, I'll keep you updated, but certainly something potentially for the future, hopefully sooner rather than later. Let me know what you think anyway, guys. Catch you in a bit.